From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon. Welcome to the COB. My name's Kyle Rodder. I'm here with Danny Akuye. And Danny, it looks like a bit of a dead rubber. In fact, I've used that in our three themes. We'll get to that in a second. But flat, effectively.
Flat as a tack. It looks flat as a tack. Up 3.4 points currently at 7,118. And the SIBO, 200 off 0.6 of a point. Whatever that is, at 1,361.
Yeah, there you go. So lots going on, but I suppose like the proverbial duck swimming, the market not moving, but maybe a lot going on below the surface. Let's look at some of the areas of the market though, which have certainly moved. And well, we can't go by past tech. Several names there driving it, but Altium up a remarkable 25%. Yeah. I think it was even, well, modestly higher than just that as well at different stages of the day. So some broad-based strength there. Even just looking across the board, you wouldn't sneeze at a day like that for tech stocks. But again, Altium, a real high flyer after its results today. Danny, the banks though are looking a little...
oh, they found a little bit of love today.
Yeah, towards the end of the session, it would appear. Commonwealth Bank at around $98.57. Westpac after its update. Was that today or yesterday?
Yesterday, and they were off about 3% yesterday, so
that's right.
Tracking a little bit higher today.
There you go. And miners, we have to look at
BHP.
Yeah,
the big Aussie, a little bit of a disappointment.
It was a bit, and we'll get through the precise numbers in just a moment. But well, maybe an outlier in the mining space. But well, 10% of the market, well, far greater than that of the mining sector. So it's or the material sector. So that was a weight on the market today. But Danny, three themes. I already gave one away, which is dead rubber. Nothing else to really more to say about the overall market. But well, 20% in one. We had 20% of the market reporting today. 10% of that, of course, was BHP.
Yeah, 11% even. Yeah.
We're really at the meaty point of earnings season now.
Yeah, we are getting, you know, ever more coming. I think Thursday's a huge amount.
Yeah, and even tomorrow's going to be a little bit more significant again, just in terms of the number of companies reporting and tech surges. Well, again,
well, Nasdaq gave us a strong lead as well.
Didn't it?
Yep, strong lead. Some really big moves. Palo Alto up 15%. Then you had Nvidia and Tesla up over 8%. Some really interesting moves, given that the 10-year yield was pretty feisty on the upside.
Yeah, certainly. And well, we'll talk about Nvidia a little bit more in a second, but I think it reports in 2 days' time now. So
correct, Wednesday US time.
Wednesday more. Was it afternoon? Market? Yeah, that's right. Okay. Pushing on, and now let's start belting out some of these names. BHP to begin with. It was a bit of a miss on both the top and bottom line, at least from Reuters data that I surveyed.
Yeah, it seems to be a little bit softer than expected. I mean, let's face it, they weren't going to do anything near what they've had for the last 2 years, but net profits off 58%, revenues off 17%, underlying profit off 37%, and profit from operations off 33%.
Yeah, and if you want it straight from the horse's mouth, David Lamont was interviewed today. That'll be on your platform to catch up on. CFO there. You can see just a few of the other details of the results. But let's go to Woodside now, and it well, it was up 6% in terms of net profit for the year. It was a fraction below, again, from the numbers that I looked at. Estimates, so maybe a little bit of a mixed result there. Another one that, well, I suppose it caught this sort of tail end of that boom in prices at the back end of last year. Obviously, we saw a lot of moderation in the second half, but nevertheless, revenues 27% higher, interim dividend of 80 cents per share. And Coles, well, that was one of the big disappointers in terms of, well, large cap stocks today. And I think it was down by 6 or 7% in the end.
Yeah, it was. I haven't had a chance to read the headlines, but apparently, like in America, there's lots of thefts going on at the moment as consumers struggle. And apparently, they've been hit by that.
Yeah, interesting. Actually.
As well as higher costs and other things as well.
No, I've got a little anecdote there. I know you hate when I go off on tangents, but
no, I don't.
I was in my, I was daydreaming as I was swiping through the, you know, self checkout.
You swept the red onion 5 times.
No,
like
no,
everybody else does.
I didn't have any money in my account. Didn't notice. Walked out, and I got basically tackled by someone as I walked out the door. And it was when I just freshly shaved my head as well, and I had my tattoos out and everything. I think they thought I was trying to nick some stuff. So. Anyway, being careful next time. They look at me a bit funny now every time I walk in. But let's go and move on from that and get back on track. Scentre Group.
They look like they had reasonable results, even though first half net profit down 69%. But yeah, that what is it? The FFO? It's not there.
Funds from operations.
Funds from operations up 1.5%.
I thought really interesting too, because we just heard that off the at the end of the close too. Just the emphasis of we can't do much about the write down of asset values, but we can focus on our cash flows, and that message really came through quite strongly. So I thought that was an interesting tidbit. But let's move on from that and look at Hub.
Yes, Hub was a cracker.
Yeah, it was. Another stock really outperformed. I don't know, did you do the interview today? Because we spoke to Hub, I think.
No.
Another one that will be on your platform, so best to hear it directly from the company rather than from me. But the stock is up 11% today, and profits of $38.2 million. We'll also pay out a dividend of $1.80, 18 cents, 18.5 cents. Almost got a few people too excited there perhaps, but also said entering FY24 with some positive momentum.
Indeed.
Okay, well, stock of the day, it was Scentre Group, and were you at the helm? No, it was David Koch.
No, it was David Koch today.
Okay, well, have a listen to what our guest had to say about Scentre Group.
Net result, if you've been a shareholder for the last 10 years, is pretty mediocre.
Right.
It's like just above inflation.
So not for you.
Well, no, because it's not. It's a well-run business, but it's just the economics of it. I can't see how they're going to improve that a lot.
Okay.
Where this would get up to be at least 10%, which with interest rates now at 5%, you can get 5% for cash.
Yeah.
So unless Scentre Group start earning more, they're actually earning less than the cash rate.
But it's hard to see where really strong growth comes from with the business. I think at a shopping centre level, they're probably maxed out. They'll keep refurbing and refreshing, and driving as Elliot pointed out, the entertainment value of the precincts that they're creating, and driving some value in that way. But I think this is a stock you probably look at it from a distribution yield point of view. Right now it's about 6%. I think that's an okay yield. You could probably hold it if you're there. I think it's doing well in the current environment.
Okay, so that was Mark Morland from Team Invest and Luke Winchester from Merriweather Capital, and sort of a hold, I guess that was probably
a hold,
the overall.
And maybe for the the distribution.
Yeah, okay. So well, it's a defensive, I suppose, kind of asset there anyway. But let's push on, get to our guest for the show today, and Martin Crabb from Shaw and Partners joins us now at the desk. Martin, great to see you.
Good to see you too.
We've hit the halfway point. I guess we've just thrown the very generic question at most guests is, have you seen it so far? Because there seems to be some big hits, but equally big misses as well.
Yeah, beating on this year's earnings and disappointing in guidance.
Right.
That's been the theme right across the board. Not every company, but companies are very happy to talk about how well they're managing the business in the uncertain environment and the costs and all that sort of stuff, but they're very, very nervous about the outlook. A, being able to pass on high costs to customers. B, the rents, the wages, the electricity costs, the transport costs, all that sort of stuff. Can they mitigate that going forward? So a few companies not providing any guidance at all, and a few people providing very cautious guidance, and the market just doesn't like that, right? You want companies to come out and reaffirm guidance, as we saw in spades with Altium today. Even though they didn't change their guidance, the fact that they didn't lower it, and they're a tech stock that's done nothing this year, everyone went, well, we better play a bit of catch up here. So that was up 30% at one stage today, which is pretty incredible. The market's supposed to be fully informed, right? So they come out with the same set of numbers and the stock goes up 30%. Go figure. But yeah, so I think the theme I'm taking away really is that we haven't seen the worst of the economy yet, and I think companies know that. But some of the pointy end retailers, Coles today, maybe Ampol yesterday with their convenience stores, because convenience stores make up about a third of Ampol's profits, just starting to see people trading down, basket sizes coming down a little bit, food inflation still hurting. So just a few kind of warning signs there. The whole retail spectrum got hit today. Wesfarmers, Woolies, everything got hit today in the food area. So maybe that's just what everyone's been talking about. We're actually seeing in the numbers.
Absolutely. There are some quite extreme reactions though, aren't they? I mean, I don't think, I'm not sure, because we were chatting about it, whether or not there's a whole lot of shorts out there, but apparently not. So what do you think is going on in terms of the investors getting really ResMed has just been absolutely, butchered. A great quality company. And
its earnings hardly moved, right? People really didn't downgrade or upgrade the company. It's just, oh, GL1s are going to come along. Everyone's going to take pills and lose weight and not need sleep apnea. And that's the theme. And the stock's off 25% this month. I mean, it makes no sense. So
no, it doesn't make any sense.
I think liquidity's got a lot to do with it, Danny. Liquidity is so low. It's
is it?
Yeah, whether it's structurally or cyclically low, but there's just not a lot of volume. So it doesn't take much of an order from offshore or a local wanting to get out of something, and it just gets massively whipsawed around. So yesterday we were talking about had you gone long Ordinate and short Iris. The day before, that was a 50% trade. Yeah. I think today was, with Altium in one direction, and there's another stock that was down 10% today. Data 3, I think.
Yes,
Data 3 was down 15.
Yeah.
So again, within the same sector, I mean, not identical companies, of course, within the same sector, 50% delta on the day. So, look, I mean, you always get some of that. I mean, there's 2,500 listed companies, you're always going to get some moving dramatically, but these are, even in the large cap space, we're getting these big moves, as you said. ResMed down 25, Goodman's up 10-15% this month, Altium's up 30% in a day. So we're seeing some big swings, and I think it is a lack of liquidity in the market that's probably helping to play that. Look, a lot of people are also nervous going into two big macro events. One is the Nvidia result. Who would have thought that's a big macro event? But it's massive, right? It's $1 trillion company, and it's a poster child of AI. If they miss, look out. And who knows what Jerome Powell's going to say on Friday. So these are two big macro events. They're not an FOMC decision, but in terms of what how jittery the market is, I wouldn't want to be having huge, longs or shorts in the market.
Anyway. Yeah.
Interesting. Well, let's maybe talk about some of those macro risks, because I guess one thing that we had seen over the last few weeks is markets really start to embrace, maybe reluctantly, the higher for longer narrative. I mean, I guess that could potentially be the risk that we get out of Jackson Hole, that we get, or bad Jerome that often seems to come out of this event.
Yeah. I think if you look at the futures curve for the Fed funds rate, it's just drifting higher. And that's it there. And it doesn't look like a lot, but if you just look at the shape of that, we're going from a peak at the end of this year, and then we've got a whole bunch of cuts. And that's a month ago in green there. And we're just every day that goes by, the market just shifts higher and higher. So that's that strong, higher for longer narrative is we're not so much concerned that the Fed's going to continue hiking aggressively. In fact, we think maybe one more hike, that's about it. But they're just going to leave them there for a long time. And the Aussie market's exactly the same. The Aussie market's moved away from an aggressively tightening Reserve Bank and shifting to a Reserve Bank that's on hold for maybe all of next year. So that's going to provide absolutely no relief to the pressures that households are under. In the US, the 30-year fixed rate mortgage is 7.7%. So it's gone up another 70 bips in the past couple of weeks. So there is just no respite, and that the equity market should be nervous about that, because that's going to impact household spending and therefore company earnings. So I think that's not a good narrative for the market, and probably one of the reasons we're off 4% this month.
Yeah, exactly, or 4% this month. I'm hearing 5% on the US 10-year. Possible. Yeah, I know, exactly.
That's scary.
That was my point. Yeah. I mean, if it did get there, it looks like it's heading to 4.5 at the moment, and some people are saying 5. I mean, we've got this bizarre thing where we've got tech stocks going up with rising bond yields. I mean, it's like a huge disconnect.
Yeah, it is. It's massive.
It is massive. And
so how do you square the circle?
Yeah, how do you square it? And when's the wrecking ball going to start?
Yeah, and we've had inflation lower than expectations, and a lot of signals suggesting that things like shelter inflation is coming off. Yeah. So we've got deflation. PPI in Germany is -6. So there's heaps of evidence out there, Danny, that says inflation is no longer a problem. So why is the bond market selling off? And the thing you need to come back to is just issuance, it's treasury issuance. So, we've had almost $2 trillion of US bonds hit the market in the past 3 or 4 months. So the Fed's unwinding its balance sheet at about almost $1 trillion a year. And then you had the fact that once the debt ceiling got raised, obviously the US Treasury had to raise a whole bunch of money to pay for Biden's spending plans. And they're running deficits, between their current account and their fiscal account of, almost 10% of GDP. So they need to print a lot of bonds. So there's so many bonds being issued in the market. So it's not so much the nominal yield that's moving, it's the real yield.
It's over 2%.
Yeah, it's over 2%. Yeah. So that's, I mean, for investors, that's great. If you can get a 2% risk-free real yield for 10 years, you should, you know, for a lot of people should grab that. Like if you've got a very low risk profile, that's a pretty good return. But it does spell warning signs for equities, because if you can get that without taking a risk, then what do you get for risk? You need to get a higher return, right? So yeah, there's a lot to unpack there. And you know, I think if the pace of US Treasury issuance slows down, then maybe some heat comes out of that bond yield. But at the moment, that's a one-way street.
Well, some people have been saying it's also a liquidity issue over there because everybody's on, you know, summer holidays over there. Who knows whether it's yield curve control in Japan as well, because they are seeing their rates moving up also. So maybe confluence of factors.
Always is, isn't it? But we could run with that for a long time. Unfortunately, we can't. We'll run out of time. But Martin Crabb, Shaw and Partners, thank you so much for your time.
Thank you, Martin.
Thank you.
Okay, let's just get across the leaders and laggards, shall we? And there are some of the leaders, and we flagged there are some big ones. Altium up 25%. Megaport too, nothing to sneeze at, almost 17% there as well.
Yeah, exactly. And Mesoblast talking about moving to profitability in full year 24, and obviously sitting squarely in that data center AI theme.
And not to forget Audinate either, because that's added another 10% to what
From
was
yesterday.
15%
Yeah,
rally yesterday.
huge.
I can't remember.
Massive.
All the numbers are blending into one at this point in time, but Audinate just on a tear. A Sapphire resource as well, an interesting one.
I think everybody's either cracking the champagne or they're, you know, going to, I don't know, cry in the corner this earnings season.
Feast or famine, perhaps. Laggards, again, we'll get to see some of the extreme moves at this end of the market. There's Data3 as we flagged. COB also reported today, actually. Rather disappointing.
An interesting look.
Return to profit too, I think.
Yeah, I don't know. I haven't looked at it. But NIB, I thought that was quite firm yesterday. And obviously the market's assessed it and gone, nah.
Yeah, we'll wait for the broken nose to hit our inbox perhaps tomorrow morning if anyone happens to flick them across. But let's get to the small cap leaders and laggards now, see if there's any sort of great moves there. Red Hawk Mining, your guess is as good as mine maybe. I guess it's earnings season, it could be something significant there. Do your own research on that one. Redbubble actually reported today though, didn't it?
Yeah, but they're still losing like $54 million.
Well, maybe the market was expecting 55.
I know. Well, that's fair enough. But, you know, as Claude Walker, who I spoke to, it's very hard to square the circle on that one as well when it's such a big loss maker.
Yeah, fair enough. Okay, laggards in the small cap space too. Having a look there, Queensland Pacific, Invictus Energy, Sezzle. It's just a fun trade for punters most of the time. Okay, let's just go through what to expect in the next 24 hours or so. Not too much on the US front, or not too much internationally, really. Nvidia will be the big earnings release, and that's not for another 48 hours or thereabouts. But US existing home sales is fascinating to get a sort of pulse check on what's happening in the housing market, because we've had a big rebound throughout 2023. But that's some signs.
No, it's in new home sales predominantly, not existing.
Not existing.
No, because they're all locked in at lovely low mortgages. I could be wrong, but I think most of it's been in new homes. Right.
Well, nevertheless, there's a couple of data points tonight.
Yep.
But tomorrow, this is what we're going to confront when we wake up tomorrow morning.
IDP, Domino's,
I chucked that in.
Woolies.
Some of the more contentious names on the market.
Actually,
WiseTech, that's
yes, I own that one. Yep. A couple of other stocks that will be interesting. And ex-dividend, AGL, AMP, Domain, Downer, Magellan, and Myer.
I hope I get to do the Dom May interview tomorrow. I think he's coming, Skyping in. I'm a big consumer, so I'd like to.
Of their vegan pizzas.
Yeah, they're not too bad, but their prices, they've managed to keep their prices relatively low compared to everything else. So
Fair enough.
I wonder if it's just a bet on costs coming down and whether that's kind of the risk that they're taking. But anyway, that'll be tomorrow. A few stocks going ex-div as well. As you can tell, again, it's been a huge day on the earnings front and in the markets more broadly. We'll check on where we finished. Danny,
I've got the ASX 200 up 6 points, 6 whole points to 7,121.6. And it looks like the SIBO 200, I may as well call it flat to slightly down, 0.6 of a point.
How about it? Okay, well...
Aussie dollar's perking up anyway for the moment.
Oh, there you go.
Yeah, up to 64.39.
Yeah, okay.
So it seems to be holding there.
Interesting. Well, again, that'll do it for another day, but you can catch up on a lot of, CEO interviews to start with. We had a stack of them today, but of course, all the expert analysis on your website. And in the meantime, rest up, have a lovely evening, and we'll see you again tomorrow morning.
Evening.